Problem 16-31, Statement of Cash Flows, all 4 sections. So, Caridad Inc. had assembled the following data for the year end December 31st, 2025. You can view the current accounts, view the transaction data, prepare Caridad Inc.'s statement of cash flows using the indirect method, include an accompanying schedule of non-cash investing and financing activities. So complete the statement one section at a time. Begin with the cash flows from operating activities. Use a minus sign or parentheses for amounts that result in a decrease in cash. If an input field is not used in the statement, leave the field empty. Do not select a label or enter a 0. So we have our current accounts here, the current assets and current liabilities, and then we have our other transaction data. So here's a quick review using our cheat sheet. We're always going to be starting off with operating activities section. And here's a larger version of it. So we're going to start off with the net income. We're going to back out or subtract depreciation. We're going to back out gains, which means we'll subtract those. We'll back out losses, which means we will add those. And we're going to analyze changes in current assets and then changes in current liabilities. So we first need net income and then add in depreciation. So our net income is over here. We've got 70,500. So we can go ahead and copy paste or type it in. 70,500 in net income. And then next up, like we said, we have depreciation expense. So we'll go ahead and add that back in here for the 25,000, which is given to us here. So we can copy and paste that in as well. So we're going to add that back in since that is lowering net income, but it does not affect cash. So next we have gains and losses. So you will back them out, which means with a gain we will subtract it, and if it's a loss we're going to add it. So when we check over here in our transaction data, it does appear we have a gain on sale of building for 5,500. So we'll need to back that out. So we're going to put in gain on sale of building, and that's going to be for a negative 5,500. Then we're going to analyze the changes in current assets. So when we look over here, we have cash. Cash is a current asset, but that goes at the very bottom of the statement of cash flows, which we can't get to yet. So we'll skip that and go to AR. And it looks like with our AR, it went from 69,200 to 64,500. So that is a decrease of $4,700. So we have decrease in AR, accounts receivable, since we are then receiving payment to AR in order to lower it. It is $4,700 positive, since we are adding that back in. And then next up we have merchandise inventory here. It went from 80,000 to 87,000. So that is an increase of $7,000. So merchandise inventory increased. So we have increase in merchandise inventory. However, will that be negative or positive? It will be negative, since in order to purchase that additional $7,000 worth of merchandise inventory, cash will have to go down. So we'll put in negative 7,000. And then next up, we are moving down to the current liabilities. So we have accounts payable first. So 56,200 back in 2024. And it looks like it went up slightly by $1,700 to get 57,900. So an increase in accounts payable. And if we take a look back in our cheat sheet, the rule says if there's an increase in current liabilities, you're going to add that. So we have then an increase in accounts payable, and that's going to be for $1,700 positive. And then we are not quite done here with the current liabilities. We have income tax payable. So it looks like in 2024 it was $17,100, but then it went down to $14,400. So that is a $2,700 difference, decrease then in income tax payable. And in order for income tax payable to decrease, we have to pay cash. So that means that $2,700 will be negative since cash has to go out. And again, if it's difficult to remember whether we increase or decrease, here on the operating activities, we have that handy cheat sheet, which also has the titles of the videos that will help you understand whether this amount will go up or down. And then, so that looks like it's our last item in the operating activities here. So we're going to go ahead and add these up. And that is going to give us a total of $16,200 here. And then to get net cash provided by operating activities, we'll go ahead and add these together here. So we have the net income of $70,500 to $16,200. When we add those, we have $86,700. So we can go ahead and I'm just going to close this out for a second here to check our answer. Good job. Okay, so we're not done yet. Remember, we have all 4 sections to do here. So we have then cash flows from investing activities. So what goes in the investing section? So for the investing section, changes to long-term assets, you can also see over here, investing cash flows are changes to long-term assets such as buying equipment or selling equipment, or land or building. So then we're going to go through our transaction data list here, and we're going to go one by one to see if any long-term assets were affected. So first off, we have common stock, but common stock is an equity account, so it's not going to go in the investing section. Depreciation expense, we already got that. Then we have purchase of equipment with cash. Equipment is a long-term asset, and we purchased it with cash, so we're going to go ahead and include that in the statement of cash flows since we purchased it with cash. So let's go ahead and input cash payment for acquisition of equipment. And since cash went down in order to purchase this, it's going to be a negative $75,000 that we are inputting. So then when we keep going down our list, we have acquisition of land by issuing a long-term note payable. So that transaction does not involve cash, but we did get a long-term asset by issuing long-term debt, so that is going to go in the 4th section. So now we're going to go down to book value of the building sold. So notice it says the book value of the building is not necessarily saying we got $53,000 of cash. This is just the amount of book value that was removed from our books when we sold that building. So we have to calculate the cash we got. So this is kind of like a logic problem. So let's really quickly review. Calculating cash from the sale of an asset, in this case the building. So what's going on here was our T account when we sold this building. The book value, remember the book value is the cost minus accumulated depreciation. The book value was $40,000, and then since it's an asset, its balance is on the left side. So when we sold the building, we had to remove this from our books. So this is why we have credited the building account. We received $50,000 cash, so that is the amount that we're trying to find for our current problem, the amount of cash that we saw. So how do we calculate the amount of cash we sold or the amount of cash we received for selling the building? you have to take the book value of the asset that was removed from our books, that 40,000, and then so if it's a gain, we add the gain. So the book value 40,000 plus 10,000 gives us the amount of cash that we received. So this is the amount that we got on our statement of cash flows. So let's fill in these amounts with the information we have in our actual problem here, since we're just looking at an example. So we have the book value of the building is 53,000. So what we're trying to find out this number. And then we need to see if we have a gain or a loss from the homework problem. And it says again that we have that gain on the sale of building for 5,500. So then how much must the cash be if the credits are 53,000 and 5,500? That is going to be a total of 58,500. So this is the number that we're going to use on the statement of cash flows, because that's the amount of cash that we received from selling this building. So then we'll input cash receipt from sale of building, and that is going to be a positive 58,500. And that is the last piece here in our testing activity, so we can go ahead and add these up. And that is going to be a negative 16,500. So what this negative 16,500 means that cash went down, so we're spending cash for investing activities, which was mostly for acquiring that equipment. So let's go ahead and check our answer. Well done. Okay. Next, we have cash flows from financing activities. So what goes in the financing activities section? So that is changes to long-term liabilities and changes to equity. So let's go back up here and start with this one. Does this affect a liability or equity? Issuing common stock for cash. So we receive cash because that's what we get when we issue common stock. And since we receive cash, we'll keep it positive. So we're going to double click, copy and paste to input that 40,000 for issuing stock, common stock, cash receipt for issuance of common stock. So going through these, do we have any other liabilities or equity? So depreciation expenses, not one. Equipment and cash, not one. Acquisition of land by issuing a long-term notes payable. So cash is not involved here, so that's going to go ahead and go in the fourth section of our statement of cash flows. And then we have a payment of notes payable for 48,100. So that's going to go here. We have a cash payment of notes payable for 48,100, and since cash is going out in order to pay this is a negative here. So we'll put negative 48,100. And then as we continue down our statement, we have cash payment of dividends. That goes in the equity section, so this also belongs. So we have a cash payment then of dividends. And again, a negative number since we are decreasing cash. And again, dividends are included here. It's because they are part of retained earnings, and retained earnings is an equity account. So that's why it goes here in the financing section. And because we paid it, that's why it is a negative number here. So next up, we issued notes payable. So that's the long-term liability, and it's going to go in the financing section here, and we received cash. So that's going to make this amount here for the amount that we're borrowing for that 67,000 a positive number. So we have cash receipt from issuance of notes payable, and that is going to be a positive 67,000. There we go. And that wraps up our financing activities. So we can go ahead and add those up. And that is going to give us a total of positive 49,000. So let's go ahead and check our answer. Excellent. Okay. And we have more to go here. So we have net increase, decrease in cash. And there are two different ways to calculate this. We can go ahead and open up the current accounts here and see what that difference in cash is from the 17,000 to this 92,100, and then that amount will be 75,100. And then the other way to calculate this or double check this number is to add these three sections. So the operating activities, the 86,700 minus the 16,500, since that's negative, plus 4,900 will give you this 75,100. And so then next here, they want to know the cash balance at December 31st, 2024. That is an easy copy and paste here of 17,000. And then we want to know what the cash balance at the end of 2025 is, and that is 92,100. So you can go ahead and copy and paste that as well. Let's go ahead and keep scrolling. There's more. We can go ahead and close this out here. So non-cash investing in financing activities. So we did briefly mention earlier that there will be a fourth part or an item in the fourth section here, and that is that acquisition of land by issuing long-term notes payable, and that is for 122,000. So we can hit acquisition of land by issuing long-term notes payable, and then we're going to go ahead and copy and paste that number over. And we leave that positive, and then let's go ahead and also put that number here as well, since that's the only going in the non-cash investing and financing activities. Let's go ahead and check our answer. Well done.